Thanks. And Karen, thanks so much for hosting this. We always enjoy and appreciate working with you guys at Coates. So, as always, it's always a good time. And I think regardless of recession, whether we're in one or going into one, I think the things that we're talking about today are great bits of information for you to consider for your business anyway. So here are the 5 things that we're going to talk about today. We are going to talk about client diversification. We're going to talk about developing and cross-training your team, growing the business, knowing your options for cash, and then understanding receivables financing. Joining me today is Dan Eichstaedt from our business development team here at TCI Business Capital. And Dan, I'm going to let you jump in and introduce yourself.
Sounds good. Thank you, Sheri. Well, thanks all for attending, and of course, Karen for hosting. We appreciate it. So a little bit about me. As you can tell, I have a busy household, 3 girls, and so I'm outnumbered. I'm what you call a girl dad is what I'm told. So yeah, I don't get a lot of sleep, but other than running around chasing after my kids, I like to be outdoors. So hunting, fishing, golfing, basically if it's outdoors, I like to do it. And I have been providing solution sales for the past 19 years. And I love, the consultative approach in understanding a client's needs and providing the right tools to succeed.
Great. Thank you, Dan. And I am Sheri Tischer. And I guess from a personal standpoint, I'll jump in here with that first. Dan's got his girls, and I guess I've got my boys. So I'm a boy mom. My eldest is a music kid. He loves to perform and compose, and his day job is as a middle school orchestra teacher here in Minnesota. And then my youngest is serving our country. He's active duty in the Air Force, and he's stationed down in Oklahoma. Similar to Dan, I love anything outdoors and being active. That picture of the boys and I, that's in the Smoky Mountains from about 1.5 years ago. I love to run, play pickleball, and then I might have a little bit of an obsession with plants, or specifically succulents. So anyway, and then professionally, I know, right? You can't help it. Professionally, my background is in staffing. I spent 15 years working directly in the industry, worked for 3 different staffing companies, 2 nationals, and then 1 local family-owned business here in Minnesota. And then I joined TCI 3 years ago, and I love still being very active and in front of the staffing industry, but it's really interesting being a supplier to the industry now with funding. Very active with the staffing organizations. I serve on the board of directors for Minnesota's chapter, and then I'm on the membership committee for ASA, and have served as an ASA mentor. So enough about us. Let's jump into our first topic for today. Client diversification. So we wanted to talk about this because this is actually one of the top challenges that we see our staffing clients deal with. And unfortunately, lack of diversification can be devastating to a business. And I think regardless of size, it might be a bigger area of concern if you're a startup or if you're a small agency, but even agencies who have been around for a long time and high revenue, I think it's still something that really needs to be managed. And when we talk about diversification, we're talking about 2 different things. We're talking about the total number of billing clients, and then their volume and the concentration percentage within your business. So Forbes says that in a mature business, no single client should account for more than 10% of your total sales. Now, I've seen other sources that say 20%. Personally, I think it depends upon your total volume, and I think it depends upon how many clients you have. I know when I was an area director for Spherion, one of my branches did about 3.5 million in annual revenue. And we had a client that accounted for about 20% of that total revenue. And I felt like that was kind of my tipping point as far as being comfortable with diversification. So I guess I would have a tendency to kind of lean toward agree with that 20% concentration. The other area that we, talk about when we talk about diversification is the type of client or the industries that you serve. So, it's one thing to specialize. For example, if you do healthcare staffing or if you do IT staffing specifically, but I think you still want some diversification within your client base. For example, we actually have a staffing owner who does IT staffing, but he's 100% concentrated within the airline industry. And that's something that I think it could be a challenge. It's something to work toward more diversification within the business. So why diversify? Loss of one high concentration client can be detrimental to the business. That's pretty self-explanatory. And then we all know how having one large client can result in high service expectations and low rates. So again, you want to manage to that and make sure that one of your clients isn't taking up all of your time. Next thing on the list is specific industry downturns. And here I think it's more about making sure that you are positioned to serve recession-proof industries. I think of healthcare, for example. If you're in general staffing, you can still serve the healthcare industry. When I was in staffing, Minnesota Children's Hospital was one of my biggest accounts because it was all non-clinical staffing. I think of med device and life sciences, that's all part of healthcare, and that's a recession-proof industry that you can be targeting, just to make sure that you're protecting yourself. Same thing with education. It doesn't have to be faculty positions or even K-12, for example. If your insurance doesn't allow you to staff in a K-12 space, it can be higher ed, or it can be targeting businesses that touch education, like a Pearson, or companies that provide products or testing supplies to schools. Next bullet point, Dan, I'm going to hand this over to you to talk about how credit and receivables risks can affect the business.
Yeah. And really on that note, I think it's extremely important just to understand, the financial stability or the credit profile in particular with your highest concentrations. And understand, what are the contracted payment terms and what are they actually paying in? I mean, in my world, very often do I see, the contract says net 30, but, the clients are nowhere near, hitting those payment terms. So understanding like how much credit are you truly extending the clients? In a general sense, you don't ever want to be someone's like largest, creditor compared to what anybody else, would give them. So understand, again, the credit profile of your largest clients. And actually kind of a nice thing I'm seeing, especially from startups, is, right from the bat, as they start landing, contracts, MSAs, asking for like a credit application. So understanding, the strength of the client that they're going to be staffing.
Okay.
So yeah, next 5 tips, again, on how to diversify, right? So, I mean, really start by sitting down, using your coach staffing software and pulling your important reports. Look at your AR aging, look at your GP report, pull out your client by revenue, and get a firm grasp on exactly where you're at with your client base and where your concentrations are. Next, create a diversification plan. I'm going to pass it right back to you on that one, Sheri.
Yeah, sure. I think, like to Dan's point, once you've really taken an opportunity to run some reports and analyze where your business is at and where some gaps are, or how you might want to fill in, and, in order to diversify, then I think collaborate with your team to determine that. Will you add new skill sets? Will you go into new geography, or just plan to grow market share in your existing space? Will you target clients in those recession-proof industries that we just talked about, on the previous slide? I know when I worked for Doherty Staffing, each quarter we had our business development managers create a list of 20 to 25 target prospects. And then we did a 6-step marketing campaign. And that was a great way for us to get in front of clients and close business by having that targeted approach. Another thing to consider, especially if you're having these conversations with your team about skill sets, and you end up, choosing some new skill sets to specialize in, is to make sure that your teams are aligned. At Kelly Services, one of the things that we did, and I know I've mentioned this on another webinar, so if it's a repeat information, sorry, but what we did at Kelly Services was something called 6x6 strategy, and you can customize it, name it what you want, but the whole idea was to get the team aligned. We picked 6 job titles or skill sets that we felt we could knock out of the park, whether it was customer service or, name the skill sets, right? And then our sales team was committed to targeting businesses based on those 6 job titles or skill sets. And then on the other side, the recruiting team was committed to sourcing and recruiting candidates with those 6 skill sets or job titles. So it gave both the recruiters and the sales team peace of mind to know that, that those positions could be filled. And the recruiters would commit to being 6 deep in each of those skill sets. So that's where that 6x6 strategy comes about. But anyway, that was a great successful strategy that we put in place at Kelly Services just to get the team aligned. As far as the next bullet point, consider adding new solutions, such as creating a direct hire program with the dedicated team. Another idea, if you don't have an on-site program in place, or you're big enough and positioned well enough to implement an MSP solution, are those things that you can add, solutions that you can add to help growth and help diversify your business. Dan, you're up.
Yeah. So sales guy, I get to hear from my boss all the time that I need to be prospecting for new clients. I would say that's exactly true with really any business, staffing no different. The fact is you're gonna lose clients. They're gonna go out of business, merger, acquisition, perhaps new management or new employee, and they might have a relationship with a previous staffing company that they had worked with that they want to bring in. You're going to lose accounts. Nobody never loses an account. So make sure you're setting aside time each week. Truly, and that's what I do in business development, is scheduling that, put it on your calendar, schedule it. Don't just get around to it when you can. Make it a priority, because you want to make sure that you're always growing. So when you do lose those clients, for whatever reason, it doesn't impact as much as it would without, kind of just standing pat. So, and then moving on to consult with a staffing industry expert for diversification strategies is, many agencies work with like an industry consultant, or maybe our mentor who, got them going in the staffing business, right? But reach out to your peers, reach out to your trusted resources, and bounce ideas off of them, and what strategies they have to promote growth and of course diversify.
Okay. All right, let's move on to our second topic, which is developing and cross-training your team.
Can I add one more note to that last slide,
yes.
Sheri?
Go ahead.
Of course, Sheri is an resource that is I call her value add at TCI. She's just a great resource to bounce anything off of, especially when I'm talking to startups and lots of questions on insurance and contracts. And so Sheri's also another industry resource that I would encourage you to reach out to.
And I have a lot of other names too of people. So anyway, okay, now we'll move on to the second topic for today: training and developing your team. A workplace survey that ASA did earlier this year ranked lack of career growth or lack of professional development as the top reason, other than burnout, why people were leaving their jobs. So that's pretty significant. And I know when I was at Spherion, the president of our company believed that there were 6 common denominators of great companies. One of those 6 common denominators is that they provide great training beyond product knowledge. So when you look at the 4 types of training that we have listed up here at the top of the slide, take a look at those and what do you currently have in place at your agency, and how can you further develop those programs in order to, grow your business and promote your own employees. When I think of product knowledge, I think of those direct job skills, like you're going to train everybody how to use your staffing software, other technology that you have in place. You're going to train recruiters on sourcing candidates and doing job postings and interviewing and submittals, like those basic, things that they need to know just to do their job is what I would consider product knowledge. But beyond product knowledge and professional development, that's what people are really asking for. And by those, I'm thinking of emotional intelligence training or negotiations training or leadership development, those things that move beyond just basic product knowledge. And then of course, cross training, how do you train people on other departments or other jobs within the organization to help out if you're short staffed. And then of course, we can't leave our contract employees out of the mix too. So I've got upskilling or developing your contract employees. So I would take a look at each of those parts of your business and what you're currently doing. And I think just to differentiate between training and development too, I think of training, like the product knowledge, the basic training, as just you're filling a gap and you're teaching a person how to do their job. But when you think of professional development and cross training, that's what you really get into the future and the growth of your business and the future and the growth of your employees. So benefits to team development and cross training. Great return on investment. So there was a 5-year research study that was done by Dr. Lori Bassi, and she's a human capital specialist. She found the following for companies who invested in training. Number 1, there was a 21% increase in productivity. There was a 24% higher profit margin, and she found a 300% reduction in employee turnover. So great return on investment. Yeah, I'd say so. Also increases efficiency, better teamwork and collaboration. It's what they're asking for. Like, as I mentioned with ASA's workforce study, they're asking for that training and that development. Workforce sustainability, employee well-being, and overall retention. According to a talent management platform called Clear Company, 94% of employees would stay longer at a company if it invested in staff development. So that statistic right there, is pretty telling. And then it makes your company more agile. If your team is trained, if they're developed, if they're cross-trained, and there is an unfortunate downturn in the economy and you need to downsize staff or make some adjustments, not only is your company prepared and more agile, but your employees are going to be better off too. They're going to be better trained and better prepared for their next opportunities out in the workforce. Then just talking about some training topics. Okay, so this list of top training topics for 2023, this is according to Hour One, which is a training company headquartered in New York City. I'm not going to go down the list and name all of them, but time management is on the list. And what's fascinating about this is I was actually a corporate trainer for a retail company like 25 years ago. And aside from the product development or product management training that I was expected to do, the number one request that I got for training was time management. So it's funny how 25 years later, people are still asking for time management training. Here we have negotiation training, but this comes from their list of top training topics. And then as far as training methods and resources, I guess one thing I'll share also from this particular training company, 68.67% of employees surveyed would rather learn a new task from video versus written or another format. So keep that in mind as you're putting together training for your people. Video training is where it's at. And then I think office book club. I mean, years ago, we used to love, doing book clubs in our office. Spherion was great at sending us books that we could read and, talk about within the company. I think it's still something that employees love to do. If anybody has a great suggestion for a book, type it in the chat and we can share that. One that I'll share, I don't know if anybody on the call was at TechServe Alliance last month, but they had keynote speakers there, Colin Coggins and Garrett Brown, who were just phenomenal. They have written a book called The Unsold Mindset, and it's actually going to be available in February. But they just did a fantastic job speaking and talking about redefining what it means to sell and authenticity in selling. And so I'm really looking forward to reading their book when it comes out in February. But I think that's also just a great way to professionally develop your team. So, okay, let's move on here. Dan, I'm going to toss it over to you.
Yeah, no, I actually came across, obviously in my world, this statistic, and it was kind of mind blowing. And this was a research done by US Bank that 82% of small businesses fail due to insufficient cash flow. And that's, that's obviously a crazy amount and really struck home. And I guess kind of put some more value into what I do and try and provide the necessary cash flow to, not just survive, but, thrive and grow. As far as, steps for improving that cash flow, first one is understanding your contract terms on your MSAs, your contracts, right? So, I mean, are you doing a standard payment term with all your clients or do you have certain clients on, slower or faster terms? And what if they pay late? I mean, does your contract illustrate anything as far as like, late fees that your client would accrue? For what it's worth, I rarely see anybody that I'm bringing on for funding ever charge their client late fees. I don't know if it's just not something that people like to do, but understanding what happens if they do pay late, and then are those payment terms working for you, right? Do you have the necessary cash flow to, usually it's again, make payroll, pay your people. And obviously no one likes to raise rates, if it's not working for you, but perhaps, as you onboard new clients and new contracts, you could, instead of, raising rates, you could standardize on a new payment term that would work well for your business. Mm-hmm. Work your aging, Sheri. I think you're going to cover that one, right?
Yep. I'll jump in here. Yeah, I guess 4 things that I wanted to mention here. Designate a person to be responsible. Nobody likes to do this. So I think having one person responsible for this in your business or in your branch is important. I think number 2, making sure it's done consistently. I mean, I always had to put it on my calendar. Like I had a weekly, recurring item on my calendar to make sure that I was working my aging within my branches. Otherwise, again, it's not a favorite thing to do. So it's one of those things that falls along the wayside unless you actually have it calendared. I think number 3, treat your client's AP department like you would treat your HR contact or a hiring manager at the company. I remember when I would get a new client or I'd go out to a client for a visit and I'd be meeting with an HR manager or a hiring manager. One of the things I always did was ask if I could be introduced personally to their accounts payable team, just because I knew that at some point I'd probably be interacting with them and I wanted that relationship with that AP department. So it was always successful for me. And then I think the 4th thing is to really watch your payment trends, especially now that the economy is a little bit uncertain. From our research and the analysis that we've done, we've noticed that the staffing industry days outstanding has deteriorated from the beginning of the year to now, approximately 25%. So if your clients have typically paid at 30 days, it's quite possible that that's been inching closer to 37 days now. So again, that can make a huge difference with cash flow. It can make a huge difference with interest costs. If you work with a funding company, like TCI or whomever else, we certainly can help with that part of your business. And that makes a huge difference, but it's just something to really be paying attention to. So, and then adjust your pricing model is number 3 on the list. Again, it's that time of year, right? Do we put across some standard rate increases, or, how do we handle that going into the new year? One of the things that we did at the companies that I worked with, we used labor market data analytics to support our need for higher bill rates. And even if it was just for specific jobs. So we use Talent Neuron, which I think is also called Wanted Analytics, but that was just the source that we used. I know there's another company out there called MC that I've seen at some of the staffing conferences. But the bottom line is, using a tool like this, not only does it give you so much valuable information on pay rates and things like that, but it's just a great way. One of the things that we could do is we could put in some numbers as far as like a job title or job skills that we were looking to fill, and it would tell us whether it was considered a hard to fill job. And so if we had that report in front of us that actually said that this was a hard to fill job, and we brought that with us on a client meeting, it just at that point made it so much easier to negotiate higher bill rates to fill the position. So number 4, focus on filling the right orders. Again, I would say, not only looking for orders that are fillable, right? Like the pay rates are good, the location's good, all that stuff that you typically look for when you consider an order a good order, but also what's their credit like and their pay history like. And I would say that an order isn't an order until it's filled, billed, and collected, so making sure that you're aware of what the credit and the pay history is of your clients. Expand your business. We touched on this during our conversation regarding diversification. So again, looking at additional solutions, geographies. So I don't really think we need to touch more on that at this point. And then with pursuing financing, Dan, I'm going to pass it over to you just to talk again about the money part of it.
Yeah. So, go right back to that stat. Again, 82% of small businesses fail due to insufficient cash flow. So what are the options out there for financing? So, I would say these are the 4 main options at your disposal. Of course, self-fund, pretty self-explanatory, right? That's typically how we're all starting off. And, pros, it's the least costly, right? You're not, paying any fees or interest on that. Cons is, I speak with a lot of people who start with a comfortable nest egg of funds available to, again, start their business and grow. And I would say it's a stressful ordeal to see what is your own money kind of flying out the door, that often has people reaching out to me. And I would say, again, with self-fund, there's always a limit, right? Usually you're going to get to a spot, it's not always a limit. Some people have unlimited funds, but usually you'll get to a spot and it's like, I'd really like to take that contract, but I don't know how I'm going to afford it. That's usually where you'll branch into what are some of the other options besides self-fund. So obviously bank line of credit or bank loan, that seems to be what most people would believe is kind of the blue chip standard. Funds on demand, it's like a safety blanket there for when you need the funds. And you only pay fees when you do draw upon it. The cons is setup time. To establish, say, like a bank line of credit, it could take as much as 6 months that I have people working towards that. Usually they're going to want 3+ years in business, and usually staffing owners are going to be in need of funds prior to kind of that bankable standard. And then there's a lot of ratios and oversight, from the bank as well, in terms of, they're lending you this money, they want to make sure that you're within their covenants, within their ratios, to continue to keep that, line or loan available to you. And then what I see a lot in my world is just where the line, they have a line, but it's insufficient, right? It's limited, and it doesn't even serve the purpose as far as how much, they're billing out on a monthly basis. And again, making that payroll. So, merchant cash advance, or MCA loans, I mean, this would be the one I would strongly encourage you to avoid. I see a lot, I speak with a lot of staffing owners that, have these in place, and they're usually very problematic in terms of, they have access to your bank account, they can dip in there and take a daily fee. It's very stressful. Now, what I would say for pros is it's quick, they're not difficult to obtain, but I would view it as, really a last resort. I get it. I've never owned a business. Kudos to all of you. I've just never done it, but you're going to do what you got to do to keep the business going. But I would say, again, last resort here. The fees are very high, and it's just not sustainable. I've seen them where they can work in a very, very short term just to get through a pinch, but again, best to avoid these high interest loans like an MCA. That's not to say all loans are bad. Like one that's not listed on here, for instance, is like the SBA loans that came out during the pandemic. Like we see a lot of EIDL loans. That's, in my opinion, smart money. I mean, the repayment terms are low, and interests is very low, and a lot of times people will have that and still continue to fund their receivables with us. So it's kind of a nice deal on that SBA. And last but not least, we have payroll funding or receivables financing. So this is my world, of course, and this is my job at TCI is to understand the client's needs, how they've been funded, up to this point, and how can I help, right? What's the need, and is it long-term, short-term? But the pros is I can have a client set up and funded, cash in their bank account within 5 days or less. So it's very easy to set up. Flexible terms, we just do a month-to-month agreement. Nothing long-term. If your cash flow is in a good spot, we're not going to hold you, for a year or two. And then you can pick and choose your clients. By no means is it smart if you have a client that's paying you in 10 days or something, crazy fast like that. With us, you can pick and choose your clients and who you want to fund, as maybe the cash flow need is not, not a massive ordeal, but just kind of a smaller need. I'd say the cons as far as payroll funding or receivables is, volume minimums. With staffing, we want to bring on a new staffing client, we want $20,000 a month of billing. That's not that much, but I assure you, I hear from a lot of staffing owners that, they want, or need, funding set up from invoice number one. And we can work on that, but I guess another con is that is we just want to make sure that you're staffing with credit-worthy facilities, right? We don't just buy any invoice and fund you that way. I mean, it does need to be through a credit-worthy facility, which is going back to earlier in this conversation, is understanding, the credit profile of your largest clients, your largest concentrations. All right, so in general sense, how does receivables financing work, right? Again, I talk to a lot of staffing owners. It's my experience, not a lot are familiar with AR finance as an option for funding. Certainly some very familiar, but many are unfamiliar. And so just to kind of illustrate how that works is we need you to put your contractors out to work, right? I do, again, speak with startups that, want to get like qualified for funding. before they've even landed a contract or even, placed anybody, we do need you working at the facility to obviously generate an invoice or receivables. Okay. Once you have your employees out there, usually weekly, and it doesn't matter for us, weekly, bi-weekly, monthly, it's all good. I mean, you could do daily, truly, if you wanted to, but essentially then our client will generate an invoice. They'll invoice their client like normal. It's not, we don't get involved in that or like, start invoicing their, your clients for you. You invoice like normal, and then you just send us a copy of that invoice and the backup, and we'll advance immediately 90% that same day. So whatever the total of the invoice is, 90% comes over that same day. And then ultimately when your client remits payment back, that's where we'll send the remaining 10% less our fee. That makes sense. Now, I would say the one thing that's key here is, just like your client, whatever's illustrated in the contract, if this is what they want with all your invoices, if it's just a timesheet or whatever, I need that same backup. So I need the approval, just like you would with the signed timesheet or timekeeping or reverse invoice. So, all of that works, something with the backup or the support. So yeah,
Okay. Yeah.
I think timing was perfect.
Yeah. Right.
Good.
So yeah, jump in. Anybody have any questions for Sheri or anything? Again, I'd probably be the better person to ask on more of the receivables financing piece.
Okay, so this one popped up. If you put the questions in the Q&A questions, I'll read them to Dan and Sheri. But this one says, would you help by determining credit worthiness of a client a staffing company would want to bring in?
Yes, that is, I'll take that one, Sheri, if you don't mind. That is exactly what we do. So, like I said, my role at TCI is to understand the need and qualify. And, usually that's going to be me, taking a look at the AR aging and seeing kind of what your run rate is with these clients. And then keeping in mind those payment terms. What type of credit do you need to even, for me to even help, right? And if I can't get the appropriate credit, then I'm kind of useless to you, right? Because last thing I'd want you to do is tell you scale back. That's not what we do. We want to, promote growth. So yes, if it's new clients that you're adding and you're our funding client, you have a dedicated account manager that can, do a credit review on any new contracts you're bringing in and tell you, what they're approved for. And that process is very short, I'd say less than an hour. You have word back on the credit worthiness.
Great. Okay, thanks, Dan. Now we have included, we do have some frequently, asked questions that we've included in the presentation. And so Karen, when you send this out, with the follow-up, this will be here for them to check that out, because it looks, I think we're just, creeping up on time here. So we can, at this point, go ahead and thank everybody for their time. And then this is our last slide that really just shows our contact information and the organizations that we're connected with. And we've got a scan code there. If you guys want to link in with either Dan or myself or both of us, feel free to take your camera and scan those codes. That'll go to our LinkedIn page. And I think, Karen, unless there's anything else that you want to do to close out the...
Jorge did have a follow-up here.
Okay.
Yes, I have a follow-up question.
Yeah.
Okay.
So it looks like the question is, I got this, Karen. What if you are a new recruitment company and billing under 20K a week? I should clarify, 20K a month is our minimum for a staffing client. So I don't need you billing 20K a week. Is that helpful, Jorge? Does that answer your question? Perfect.
Okay.
Okay.
Good.
I did put in the chat, just FYI, I put in the chat the link to the Amazon book that you had mentioned was coming out in February.
Oh, yeah, perfect. Sounds good.
It's from Amazon. I don't know. I mean, they were originally the book company people. So
Yeah.
that'll definitely give you the title and all of
Great.
that. So yeah. Thank you, Dan and Sheri. This is very helpful, very, very interesting. I already ordered the book for my Audible, pre-ordered, so hopefully everybody got some takeaways, and you know how to reach out to Sheri, and you know how to reach out to Dan, and of course, everyone should know how to reach out to me at coachsql.com. So thank you, everyone, and we will be converting this and sending it along with the slide deck. Appreciate your time, and happy holidays.
Happy holidays. Thanks,
Bye.
everybody.
Thanks. Take care, guys. Be safe.